What's up traders, it's Nick here and welcome to another breakdown. As usual, I will be keeping it as educational as possible. So without further ado, let the intro roll and I will see you on the charts. The pair that I want to speak about into this video is GBP CHF. Now, why do I want to speak about GBP CHF? Because we are very near to having a good opportunity on it. So I want to share exactly a full multi-time frame analysis of this pair to show you where and how we can be looking for the next potential opportunity. And as usual, I will be keeping this analysis as educational as possible. So first, I will be covering the technical aspect of this market. We will then go and see what we have from an order flow perspective by checking the commitment of traders, which is what hedge funds are currently doing in the market. And by the end of the video, by using the combination of our technical analysis and our order flow analysis, we will be able to understand where we can be looking for the next potential opportunity. Now, starting here from the monthly time frame, what we can see now here on the monthly is quite clear that we are currently testing extremely strong monthly supply. In fact, exactly from this area, the market started all this move to the downside, and currently we can see how the market has just entered exactly the same supply zone from which we can easily expect the market to provide a rejection to the downside. What we can also notice is that in approaching this area, the market has also created a strong impulse. And in general, in the market, after an impulse, you do expect the market to provide a correction. And since in this specific case, we are testing this supply after the creation of the impulse, this could be a very good zone from which the market does decide to start the correction that anyway we expect after this impulse. So here on the monthly, everything looks quite bearish and we can expect the market to provide a nice correction. Going down on the weekly time frame, what do we have? Now here on the weekly, what we can see is that the market has just provided a nice impulse correction and the market is currently providing the continuation to the upside. We can also notice that in all this impulse, there is one candle not related to the move, which is exactly this red candle here, which is a strong structure area to which we can definitely expect the market to provide a correction to before a potential continuation to the upside. So here on the weekly, still, we do expect the market to provide a correction because the market definitely seems overextended to the upside. Going down on the daily time frame, what do we have? Now here on the daily, things get very interesting. In fact, we can see that in creating this last move to the upside, the market has also started to create an overextended W formation. Now, generally speaking, when you see the market create an overextended W formation, what you want to see after this is the market provide a correction at least to the 0.32 of the Fibonacci taken on the impulse leg. Now in this case, the impulse leg is from this low to this high. So here on the daily time frame, what we expect is for the market to provide a correction at least to the 0.32 of the Fibonacci taken on this daily impulse. But overall, we would even like the market to complete the pattern at the neckline, which is the previous resistance turn support, because anyway, as we have already seen, on the monthly and weekly timeframes, we expect an even deeper correction because on the monthly and weekly, we are clearly overextended to the upside. If you have any requests for other breakdowns, make sure that you leave it in the comment below and also make sure you like and subscribe. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds are currently doing in the market. So the non-commercials in the market, which are basically institutions that are in the market just to make money. If we follow their orders, what we can see now, we can see that lately the net positions have been decreasing. In fact, we went from having 36k net positions all the way down to having 21.8k net positions with 3.4k shorts added with the last report and 3.3k longs getting closed. So overall, what we're seeing here is that shorts have just reached 30k and longs 51k. However, here the longs were 68k and now they're 51k. So longs got decreased and the shorts overall, we can see how with the last report, they finally started increasing. So shorts are getting increased, longs are getting decreased, which means that the pound can easily become weak. And if we go and see what we have on the CHF, we can see how overall on the CHF, we have seen even more weakness than what we have on the pound. In fact, we went from having 14.3k net positions all the way down to having 2.8k net positions, which is one of the lowest values that we had so far, with 9.5k shorts and 12.4k longs. So overall, the CHF is even weaker than the pound, which is exactly the reason for which we have seen this uptrend, because the CHF is even weaker than the pound. However, the slightest retracement in the weakness of the CHF, which by the way is clearly already priced in, could easily result in GBP CHF starting to move to the downside, because we have already seen that the pound is quite weak. So it's only a matter of waiting for the market to actually start showing some weakness. But that is always like this, because trading is reactive, trading is not predictive. So how we will be approaching this potential shorting opportunity with students? Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data are the best timeframes for the directional aspect of the market. But when it comes to confirmations and entries, the best timeframes are the 4-hour and the other intraday timeframes. So with students, what we will be doing is monitoring price action from a 4-hour perspective and lower during this move to the upside. And we will be waiting for the market to shift from a 4-hour and lower bullish market as we have right now to a 4-hour and lower bearish market. And as soon as the market will shift from a bullish to a bearish market, at that point, we will be adding GBP CHF to our watch list with students. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities at that point for the move to the downside and for the market to retrace at least to the 0.32 of the Fibonacci taken on this daily impulse. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education analysis and updates. For all of you, you can also comment below and let me know which pairs you would like me to cover in my next videos. Also, make sure you go and check out the mentorship program. It's a very complete program. The link is in the description. First, you get all the rules of my rule-based strategies, and then you trade the strategies with me. Each and every day, you get a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits, as well as having me answering all your questions every single day, including the weekend. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in it.